Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for Tuesday, May 26th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were up 1.23% on the S&P 500 and closed at 2991.77. The first chart that we're going to look at is a 2-day, 2-minute chart of the S&P 500. So each candlestick represents 2 minutes of trading. This is Friday on the left panel, and this is today's trading, Tuesday the 26th, on the right panel. What we can see here is that we gapped up at the open and actually made the highs of the day right at the open of the market. Traded sideways for the majority of the day, and then starting around 3:30 in the afternoon, sold off a little bit and closed beneath 3,000, which would have been a very critical level for us to hold. But at least for today, we could not hold this 3,000 level where I have this blue line drawn. And again, we closed at 2991.77. The next chart that we're going to look at is a year-to-date chart of the S&P 500, where each candlestick represents 1 day of trading. The orange line is the 200-day moving average, and we could not close above the 200-day moving average today. Barely missing it, though. The 200 is setting right at 3,000, 2999.98 to be exact, but let's just call it 3,000 for easy math. And again, we closed about 8 points underneath that, so maybe tomorrow we can get back above there. But when you see these types of days where you gap up at the open and then close at the lows of the day, that's not exactly the most bullish sign. True, we were up 1.23% today, but when we take a look at the sectors that actually worked, the two top performing sectors for today were the financials up 5.06% and the industrials up 4.12%. And the two weakest sectors for the day, both negative, were technology down just a little bit, down 0.12%, and the healthcare sector down 27 basis points. But these two sectors, along with communication services, which was the third worst performing sector for the day, albeit positive 24 basis points. But these three sectors have been the strongest performing sectors over the last couple of months. And, we saw a huge upside, right? 4 and 5% on the two best performing sectors for the day. But when we look over a longer period of time and look at the financials over the last 5 years, and so what we're looking at now is a 5-year chart where each candlestick represents 1 week of trading. And you can see here this gap up today, right? This is the weekly chart, but today is the only day so far for this week, so it just shows today's action. But you can see here that even though we had a nice gap up today, we're still trading on the financials, the financial sector, we're still trading well below the 40-week, 200-day, right? 40-week moving average, and the financials are trading where they were back in 2017. And we're seeing a very similar thing on the XLI, the industrial ETF, again, trading well below the 40-week, 200-day moving average, right? 40-week, 200 days, same thing. So we're trading well below the 40-week moving average. And again, the XLI, the industrials, are trading where they were back in 2017. So yes, it was a nice up day today, but let's keep it all into perspective and understand that this market is still pretty weak and it needs to prove itself. So it'll be interesting over the next couple of days to see if we can get some follow through. Can we get up above that 3,000 level? Can we start to close consistently above 3,000 and above the 200-day moving average? But for right now, just don't get too excited and understand that what we saw today was sectors that haven't been doing so well did very well, and the sectors that had been performing quite nicely over the last couple months were actually the losers for at least today. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red. And what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Thank you for watching this video. Before you leave, don't forget to subscribe to this channel. Please give me a thumbs up on this video and check out some of my other videos. I have a lot of great educational videos on this channel. And if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, 403b, your IRAs, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here's some additional information. As part of the Simple Market Signals model, there are three powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy.